More so than ever before, people are turning to affordable watches to get their watch collecting kicks. That could be through homage brands on AliExpress, vintage pieces on eBay, or even our favourite affordable watch brands such as Casio, Tissot, and what we'll be talking about today, Seiko. But have you ever stopped and thought these are getting worse? I'm getting less for my money here. Well, I certainly have. So today let's talk about it. Welcome to Doug's Watches, the Thinking Watch channel. Here I normally talk about art, design, history, theory, philosophy, and how they relate to the world of watches. And if that sounds good to you, do make sure to like and subscribe. But today I'm turning my attention to another interest of mine, economics. And yes, I am an absolute hoot at parties. See, unfortunately, the watch world is not the complete escapism from the realities of our world that we often hope it to be. It too is impacted by the horrors of supply and demand, corporate greed, and of course, the word of our times, inflation. And I can think of no better way than discussing this than in relation to Seiko. See, I would not be the first person to note the price increases that this brand has seen in recent years, nor their upmarket focus with the apparent pivot away from the well-priced fives to more expensive prospects and presage models. But it wasn't until this week when I was researching Seiko for other reasons that it well and truly hit me. These cost a lot more than they once did. In my travels around the internet, I found an article on Hodinkee from 2015 titled "A $75 Watch That Looks Like $1,000,000." This shook me to my core, even though it probably shouldn't. After all, at the same time, Speedmaster I believe was around £3,000 to £4,000. All watches have gotten more expensive and not just on the affordable end. But on the affordable end, it for sure feels worse. And that is because it is. I checked on one of my favourite things ever, the inflation calculator, and $75 in today's money is $102.52. But what does that comparable Seiko cost today? Well, that dressy style, not sports style Seiko 5 with a movement comparable to the 7S26, well, if we go to the Seiko boutique site, you'd be led to believe it's the SNXS series, which starts at $415. If you head to sites like Watch Nation, you'll find some slightly cheaper models, nearer the $200 mark. However, it has to be said, Seiko's watches have increased at a rate faster than inflation, and as a result, we must ask, are we at least getting better products? Well, yes and no. You can make the argument that with the generations of watches, the build of each has improved. In a less tangible sense, bracelets have improved. The 4R36 movement that we now see in 5 branded models is miles ahead of the old 7S26 piece. It does feature both hand winding and hacking, which its predecessor did not. But in other areas, we are losing out. We are experiencing shrinkflation, a phenomenon coined over the past few years, where many brands and sectors are decreasing the quality and features of their products in order to get a higher profit margin and continue to post record profits as a result. And how is this impacting Seiko? Well, if we look to the Seiko SKX007, a darling of the affordable watch world, it had a screw-down crown and, of course, 200 meters of water resistance. Whereas if we look at the watches that carry on its aesthetic lineage, so the GMT and Seiko 5 SRPD55, well, we're looking at a push-pull crown and a 100-meter water resistance instead. While true, it can be said that Seiko have cut back something that end consumers rarely, if ever, use, it must also be acknowledged that we, as the buyer, are spending more money and not getting what we once did. And this is just like what we've seen from gas suppliers to food manufacturers, and that has all been driven by corporate greed. At the time of writing, we're waiting for Seiko's figures for 2025. But in fiscal year 2024, the Seiko Group brought in 304 billion yen in sales. That's roughly $2 billion US. Their operating profit hit 21 billion yen. That's around 137 million USD. For comparison though, back in 2015, Seiko's total operating profit was about 13.3 billion yen. So yes, profits have remained consistent, even when many enthusiasts have said quality has gone down. It's important to note that to have a full picture of what's going on at Seiko, we'd need to have their exact sales figures, and if someone would leak those to me, I'd very much be interested. However, back in 2015, Seiko's overall turnover was 296 billion yen. The overall growth for the group over the past decade has been relatively minimal, but that doesn't tell the entire story for their watches. They do offer other products and services. But fortunately, in the earnings call, Seiko break down this for us by the sectors that they operate in. Back in 2015, Seiko sold 164 billion yen worth of watches, with a profit of 12.7 billion yen. But in 2024, that was 175.9 billion yen, with a profit of 20.6. And if you were to look at the increase in price of an affordable Seiko over the past decade, it might be a logical conclusion that with prices doubling, so would turnover, their sales, but it hasn't. I think it's fair to say the watch market isn't growing at a rate that would facilitate Seiko to grow through more and more watch sales. They must look elsewhere to drive business growth and profit, or at the very least in order to remain the same. And Seiko have been doing this through their Presage and Grand Seiko models, which in their report for 2024 they acknowledge are responsible for growth in their watches. However, the profit margin is increasing on their watches. In 2015, this was 7.72%, and in 2024, 11.71%. Nowhere near the margin increase we've seen in other sectors, sure, but still a notable one. So yes, material costs have increased over the past decade, and so has labour. But for every watch that Seiko sell, they are now making a little bit more money, proportionally speaking, than they were a decade ago. It's important to note, of course, that watchmakers are businesses. They don't have an obligation to value or the history of watchmaking and its fans, but instead to remaining in business, to making a profit, and on an ethical note, perhaps keeping people employed and contributing to society through taxation and maybe not destroying the planet. But powering all of that, though, are their shareholders, those that have bought into Seiko and its success on the stock market. For the large part, those who have invested are likely not watch fans. They are opportunists, looking to get a dividend or make a quick buck selling the stock. These investors would otherwise invest in infrastructure, fashion and tech, and whatever else that would likely give them a return. And that's the problem for Seiko and any other publicly traded company, both in and out of watches. Seiko's return on investment has to appear as lucrative as everything else an investor can put their money in. Because you first have to attract their investment, but then you must also retain it. Doing so is hard. You must prevent them from seeking and finding investments elsewhere, and in turn selling your stock and reducing its price. This can be a death spiral for businesses, the first step of bad PR along the way to administration and insolvency. So it's understandable why businesses pursue these margin and profit-focused actions, even when they're doing well and even maybe leading their market. However, we must ask, why, when everyone else appears to be struggling, should a watch brand or any company for that matter be doing so well?